All right, welcome back to another episode of Asset Coach and Tax Strategist. My name is Robert Wolf, and I am your host. And so today's episode, we're going to talk about we're in tax season. What's this mean? And um, this always seems to be a time of the year where it's high stress and anxiety. And so what I want to do is kind of really spend a little bit of time talking about the difference between tax preparation and tax planning. There is a difference, and this is always a good topic to revisit, even if it's been discussed year over year, because we get so busy with our life and there's so much focus on tax preparation, getting your taxes done, and the feeling of not having enough savings and taxes, and it just feels like you keep paying the tax man, and you hear what the government does in spending our dollars, right? There's all these emotions and feelings, and so let's talk about the difference between tax planning and tax preparation. Let's first talk about tax preparation. What's that mean? Well, let's look at your traditional tax preparer. Could be a enrolled agent, could be a CPA, or it could be somebody at like H&R Block or Liberty Tax or whatever the case may be. Now, if you're watching this, more than likely you're part of our tribe of people, so to speak, where you're not using H&R Block or Liberty Tax. You're probably using an enrolled agent or most commonly a CPA. Now, let's talk about what tax preparation really means. It's just that in the name, preparing taxes. So what that means is that when you get all of your tax documents, your 1098, your mortgage statement, your 1099s, all the income interests, dividends, or whatever type of income you earn, your K1s from partnerships and pass-throughs, your W2s from wages, you gather all this documentation, you get all your deductions, you get all your charitable contributions, you get everything, and you send it to your CPA, for example. Now what? Well, typically we are doing all this stuff now, right? For 2025. So what is your CPA going to do for you for tax savings from last year? Well, really nothing other than the information that you provided. So they're going to go through all your documentation. They're going to take this and this data input. They're going to put it into the software. And as it's in the software, it's going to determine, okay, here's the taxes you owe, or here's you've overpaid taxes and you're going to get a refund. That's technically what tax preparation is. Now, there are certain situations where you're able to still manage or have an effect, if you will, on previous years' income and taxes, and usually that has to deal with some sort of retirement account. Now, you always got to sit here and put on your glasses and your investigator hat and be a little bit of Sherlock Holmes and say, okay, if I'm here today, right now, and 2025 was with almost 4 months ago, so we're going to be, by the time of this recording, we're going into April. So why does the government allow me to still contribute to my retirement accounts and get the deductions for that? Well, because where do you think they want their money? Where they want you to clog up, or what I like to say, imprison your dollars. Retirement funds are imprisoned, meaning that they have to serve a time. That time is to 59 and a half. Okay. Now, yes, you may get a tax benefit, which is why most of you do this, because, hey, you can still contribute to your retirement account and get a tax benefit. Now, let me make sure this caveat is explained in I'm not giving investment advice here. I'm not giving tax advice here. Okay, this is educational, informational purposes only. Okay, I don't know your situation. I don't know what you are, what you're doing, or how you're doing, or anything like that. So please, 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 please understand there is no advice here, just education. Okay, so as you're looking at your taxes, and when you put money into your retirement account, yeah, that money is going to be imprisoned to age 59 and a half. Now, you can go online and visit your imprisoned dollars and see how they're doing and all that kind of stuff, but they don't get released until after 59 and a half. Now, when your retirement funds get released after 59 and a half, what happens? They're all taxable. Okay, so the key here, though, is who makes the fees. The banks and the investment companies, insurance companies, we call them the financial distributors, are the ones that makes all the fees on your dollars sitting here in prison. Okay. Now, as you are getting your taxes prepared, what's that look like? Well, you're kind of handcuffed. Here's the thing. Tax preparation is rear view mirror, right? There's a reason why if you imagine sitting in a car and you're driving, what's the biggest thing in front of you right now? Your windshield. Your rear view mirror is just this little mirror right here to give you an idea what was behind you, what's looking back. Nobody drives looking through their rear window. That's what tax preparation is. It's looking at the rear window, what already had happened. Okay. Now, tax preparation is preparing that. So a lot of times we have this expectation that our CPA or our tax preparer is going to save us this money, or they should be saving us money. All right. Now let's talk about tax planning. Tax preparation is history, right? That's just all you're doing is reporting based on history. Tax planning is active. The word planning, it's an active. You're actually doing it. That's the windshield in front of you when you're driving. Okay, you're looking forward. You can see the horizon. You're planning for that destination. Okay, now having a good strategist, tax strategist, makes all the difference. Putting money into a retirement account, buying a home to deduct the interest off the mortgage, that is not tax planning. Sure, those have an effect on taxes, but that is not planning for taxes. Actual strategic tax planning is using a variety of areas of the tax code. And here's where this theme comes into play right now, is that when you look at tax planning, you need to review and kind of get your mentality in check as to the IRS is not your adversary at this point. The IRS is your business partner. Okay. Now, I get a lot of pushback when I say this to our members, but think about it this way. The IRS tax code is a legal system that says, here's what you can do. Now, it's written in English, but it's a different dialect. You may not understand what it's actually telling you you can and cannot do. Okay. And if it was in plain English to where everyone can understand, then that wouldn't really behoove the IRS, right? A business partnership, both parties have to work. Okay. Now, where's this relationship come in? Well, the IRS gives you this rule book, this legal system to say, hey, if you're able to figure out how to utilize this rule book, this legal system to affect you, then I'm going to reward you with tax savings. Now, you as a business owner, you have the asset, you have the business. Okay. Your job as a business partner is to create more taxpayers for the IRS, meaning employees. You grow your business, you have to hire more employees or independent contractors. They pay taxes. That's the tax revenue. The IRS does not require you to pay taxes other than what your taxable income is based on all your accounting and all your deductions. So the tax code's written for business owners. You're able to reduce your tax liability because of the way the tax code's written for business owners, because you're creating more taxpayers. As an individual W-2, there's not a lot of tax benefits. Okay. Why? Because they don't want that to be. It's just plain and simple. W-2 are the taxpayers. They're the ATM machine for the IRS. Okay. So now what's the point of a business? To try to make money. So in order for you to be able to reduce your tax liability, you have to have cash flow. You have to have assets. You have to have the strategic ability to say, I've got this cash. I'm going to deploy it into the system. And as a byproduct, the IRS is going to give you tax benefits as a partner. Okay, you guys need each other. The IRS needs you to create more taxpayers, and you need the IRS to be able to create tax savings. Okay, because if you can't say, well, I don't need the IRS. Well, yes, you do, because then you're overpaying taxes. Okay, there's a need. Now, you don't have to always like your business partner. So I'm not saying you guys got to be bedfellows, right? The partnership is you got to work together. Okay. Now, sometimes you're going to work harder than the IRS is going to work harder. Sometimes the tax code is going to be better for you than you're going to be able to have more cash flow and be able to say more and put more liquidity into the assets and the tax system. Okay. So Tax planning is understanding that mindset of, okay, how do I deploy my capital? How do I deploy this? And how do I use the legal structure to be able to qualify for these various tax strategies? Now, takes a lot of work, right? You got to earn it. It's not just going to be given to you. Typically, most of the things that are given to you from a tax perspective, specifically as a W-2 wage earner, what's the benefit? Really small, purposely, okay? Low-hanging fruit, but if you want the really best fruit, you want the juicy stuff, the stuff that's right up at the top in the middle, close to the sun, that's really juicy and rich, you got to climb the tree. You got to work for it. You got to get up there. You got to take a little bit of risk, right? The branches are thinning as we get to the top. You got to take a little risk, okay? The reward is dependent on what the risk is focusing. That's the strategic part, okay? So very, very important to understand that. So this time of the year, it's most of the stuff is, again, history. We're preparing for taxes, okay? Now, when can you start tax planning? Well, right now. Start right now, right? What's the best time to plant a tree? Well, 20 years ago. What's the next best time? Right now, okay? So if you want to sit in the shade, go look for a tree or plant a tree. So tax planning, you can actually start doing that now and preparing for your 2026 tax return, which, yes, is not going to be for a year from now when you submit it. But file extensions, it's not going to be till October, right? So you got, about 18 months. So there's a long period of time for us to do planning between now and the end of this year, and then to have filing at October-ish if you file an extension, okay? So tax planning is an active thing. You've got to constantly be doing that, okay? And if you're not sure what that means, if you're not sure if you can qualify and what you need to do, you need to find a strategist. You need to find somebody who's in the world of tax planning. Okay. Now, this is obviously what Terra Firma does for our members, but there are qualifications. We have certain qualifications for people to be accepted as membership because there's a lot of work that we put into this. So we build out a relationship. That's why we call our clients members. We have a membership structure because of that. There's a lot of time and energy and work that goes into this, and a lot of expertise and a team, and a lot of this relationship needs to be more of an intimate commitment to each other, so to speak. So, but there's a lot of tax strategists out there. Some are really good, some are okay, and then some suck, just like anything in any industry, okay? But whatever a tax strategist is more than likely going to always be better than just tax preparation, because tax preparation you're going to have to do anyways, but it's very stagnant. Right? It's looking, like we said, looking at the historical, what already happened. We're going to report what already happened. A tax strategist, no matter how good or bad they are, is still going to be better than just not doing anything. All right. So thanks so much for spending your time here, investing your time with us. Hopefully this was helpful and at least whetted your appetite just a little bit to start planning for your 2026 tax returns as you're filing and getting ready to file your 2025. My name is Robert Wolf. Thanks so much. Make it a great day.